hit that next target. And I had mentioned Tesla Incorporated, a company of the consumer cyclical sector and auto manufacturers here off the daily interval, would offer an objective short trade entry, get out of your longs, cover some profit. On the 8th of April, 2023, we were trading spot price 185, where we observed a really peculiar symmetrical triangle pattern here in the charts, where I have not yet to see it documented or discussed online anywhere in any trading forums or anywhere really online for that matter. Nice, clean, reactionary high, reactionary lows, all across the board there. Put in a nice, clean, divergent high, negative bearish divergences, RSI divergences, and capturing this phenomenon, I recommended it as a potential lucrative short trade entry point with a cautionary note on risk management and appropriate position sizing. The charts proved to be prescient once again, as both the gross margin shortfall at approximately 170 basis points and the missed free cash flow targets became the focal point of market attention here. Just a nice clean where we had this primary day reactionary high downtrend line off the October reactionary highs, where I had mentioned in that previous video, where we had an overshoot. We ended up breaking out a huge volume price indication around this range as well. Broke out. We had the 200-day moving average hovering up above here, and it failed. It ended up having a momentum fueled overshoot, came right back in, snapped that 50 exponential moving average as an early sign. And I can't stress enough that a false breakout is usually one of the most bearish trends you can get, where you trap in a ton of longs around this range, and usually a quicker and or faster move to the downside can occur. Whereas bull traders, long traders needed to break right back above it and create a false sense of a breakdown. And here's the update. Ended up backtesting it pretty violently right amongst that key 50-day moving average. Again, dual resistance, leverage up that trade and or add to your existing position size there, and it was rejected pretty violently. So the entire trade thus far, and that was good for a 9% crash there, and we hit that first target. Well, we're honing in on that first target. You want to cover a little bit before that first price target. Well, we are now at a crucial inflection point. 167.49 price resistance, as I had mentioned in the previous video here, is a key inflection point. This is the underlying big, really fourth and inches moment for Tesla. Tesla starts to take this level out where we already have key momentum indicators in the average moving average convergence oscillator testing their zero lines as of now. The histogram oscillator has completely put in a nice solid red candle close below that zero line. We are at a key momentum technical indicator inflection point. And if we were to snap this, again, like I had stated in my previous video, I would only suspect a very quick move, a more quicker move to the downside. There's a lot of leverage in here that needs to be washed out. There is nothing that will take this stock down quicker than a extreme rush for the emergency exit doors once upon snapping that 167.49. So we'll see what happens. Bull traders, long traders, dip buyers, they need to step in right here. They need to defend this key 167.49 price support really at all cost before things start sliding to the downside pretty quickly there. We'll see what happens. As far as long-term investors go, these are your key average down. You want to average down right at these positions. This is where you buy. You start buying at 136, 122, 117, 102 for that bounce. If you're a believer in Tesla for the ultra long-term. In the near term, the charts are indicating more downside in my opinion. Tesla is the only profitable electric vehicle company. If their margins are down, everyone else is losing even more money. And this is it's not going to be sustainable for the competitors. Elon Musk has cut and slashed prices 6 times this year alone. Oh, I don't believe a lot of these competitors. So what we'll do is we'll start to look into a lot of these other electric vehicle companies and see if there's any worth shot at them trading pretty high for a potential next short trade setup potentially, and or an ideal for you to get out of your longs and or long trade positions and maybe dollar cost average on the way down. So we'll see what happens. Not a whole lot of traders ended up seeing this symmetrical triangle pattern. Beautiful divergent high, false breakout, momentum fueled overshoot, back tested 3 days in a row there, and it was rejected violently. Once again, the charts just manufacturing the headlines.